Sector ETFs. How to bet on industries without picking stocks. Most people think you need to pick individual stocks to win in the market. They're wrong. And today I'm showing you a smarter way that's already making thousands of Americans serious money. What if I told you that you could invest in entire industries without ever researching a single company? That you could bet on tech without buying Apple or Microsoft? That you could ride the healthcare boom without touching a biotech stock? That's exactly what sector ETFs do. And honestly, they might be the best tool in your portfolio you've never heard of. My name is your host. And if you're new here, hit subscribe because we're breaking down the fastest way to grow your money without losing sleep at night. Let me start with the basics because this changes everything you think about investing. An ETF is an exchange-traded fund. Think of it like a basket of stocks that you can buy with one click. A sector ETF is that basket. But instead of holding 500 random companies like the S&P 500, it holds only companies in one specific industry: technology, healthcare, finance, energy, materials, industrials, consumer goods, real estate, utilities, communications. That's it. 11 sectors that make up the entire US stock market. Here's why this matters to you right now in 2024. Let's say you have $5,000 to invest. You open your Fidelity account or your Robinhood, and you're staring at thousands of options. Do you pick Nvidia for AI? Do you pick Tesla for electric vehicles? Do you pick some small pharma company betting it'll crush it? You're stressed. You're researching for hours. You might pick wrong. One bad pick could tank your gains. Or you could spend 30 seconds finding the technology sector ETF, something like XLK or VGT, and boom, you own a slice of every major tech company plus hundreds of smaller ones. If tech booms, you win. If one stock crashes, you barely notice. That's the power. You're not picking stocks. You're picking trends. Part 1. Why this actually works. Let me give you real numbers because this is where it gets exciting. Let's say back in January 2023, you had $10,000. You were bullish on technology. You could have tried to pick the next big winner. Maybe you throw it all in one stock. Risky, stressful, could go sideways. Instead, you buy the XLK technology sector ETF. That 10,000 splits across Apple, Microsoft, Nvidia, Google, Meta, and literally hundreds of others automatically. You're diversified. You're sleeping at night. From January 2023 to today, XLK is up roughly 55%. That 10,000 became $15,500. Your Roth IRA grew by $5,000 just by betting on an industry instead of picking individual stocks. That's not luck. That's strategy. Here's what blows people's minds. Most professional stock pickers don't beat the market. Studies show that over 10 years, 85% of active stock pickers underperform a simple index fund. You're competing against people with million-dollar research teams. You're going to lose that game. But a sector ETF? That's different. You're not trying to beat your sector. You're betting your sector beats other sectors. That's a smarter game. Part 2. How to actually use these. Okay, you're interested. How do you actually do this? Step 1. Open an account. Fidelity, Vanguard, Robinhood, Charles Schwab. Any brokerage works. If you don't have money yet, open a Roth IRA. You get $47,000 of tax-free growth this year if you max it out. Sector ETFs inside a Roth IRA? That's the move. Step 2. Pick your sector. Don't pick random. Pick what you actually understand. If you work in healthcare, you know that industry is booming. If you follow tech news, you see AI everywhere. Pick a sector where you have actual conviction. Step 3. Search for the biggest ETF in that sector. Technology? XLK has $300 billion in it. That's massive. That's liquid. That's safe. Healthcare? VHT. Financials? VFV. Stop overthinking it. The biggest ones are the biggest for a reason. Step 4. Buy. That's it. You own a slice of the entire industry. Part 3. The real talk. This isn't perfect. Sector ETFs move with their sector. If tech crashes, your tech ETF crashes. You're not getting individual stock protection, but you're also not getting destroyed by one bad pick. The fees are tiny though. We're talking 0.03 to 0.05% annually. You're paying practically nothing. Here's what I actually do with my money. I have a 401k through my employer with a boring S&P 500 index fund in there. Boring. Solid. Long-term. That's my foundation. But I also have a Roth IRA where I allocate money to sectors I'm excited about. Maybe 30% technology because AI is changing everything. 20% healthcare because aging population means growth. 10% in financials because interest rates are still sticky. The rest stays diversified. This isn't a get-rich-quick play. This is a get-rich-slow without picking individual stocks play. Final call to action. If you're tired of researching individual stocks and stressed about whether you picked the right company, sector ETFs are your answer. Start with 1. Put money in monthly. In 5 years you'll be shocked at your growth. If this helped you, subscribe right now. We post videos every week about building real wealth without being a finance expert.